Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, May 1st at about 1:30 p.m. Eastern. Well, the S&P 500 and NASDAQ rose to fresh all-time highs again today, boosted by Apple shares, while oil prices fell. Shares of Apple climbed more than 3% after the consumer tech giant posted a fiscal second quarter earnings and revenue beat. On the flip side, though, oil prices fell after Iran reportedly sent its response through Pakistani mediators to the latest U.S. amendments to a draft agreement to end the Middle East conflict. West Texas Intermediate crude futures fell about 4% so far today to trade at about $100 a barrel. And now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $722.45 at yet another new all-time high. Absolutely incredible. The SPY is now 4% above the all-time highs, that's right here, above the all-time highs set in January back here at $697. So, and as you can see here, it's trading at a pretty high premium to the red line, the 20-day moving average. It's actually trading at a 3% premium to the 20-day moving average. The red line's coming in here at 698. The green line, the 50-day moving average, is coming in at 680. And the 200-day moving average, the black line, is coming in at $670.95, so about 691. And we for those of you who aren't sure, moving averages can be very, very strong support or resistance depending on which side price is trading on it. And also you need to know maybe that institutional investors and traders that move the money, the big money, they watch the 50-day moving average and the 200-day moving average quite a bit. So they can become very important. Now, the SPY, we know, has been climbing in an uptrend. You can't see it on this chart, but the SPY has been climbing in an uptrend, a very strong uptrend from last April's lows. Last April lows a year ago, the SPY was trading, it dropped to 481. Then it made a U-turn, much as we had just recently, but a year ago, April, it made a U-turn, rebounded, and walked up its 20-day moving average, the red line, for almost a year in a very strong uptrend until it hit this October all-time high at the time at 690. And that move up for that from April to October was a 44% gain, which is a really, really incredible move. Then the SPY succumbed to profit taking because that's what happens. Markets move in cycles. They don't move straight up. And as I like to say, please God, they don't move straight down forever either. And so the SPY got up here to 690. Then it fell down here. It got profit taking, came in. It fell to 652 in November. Then it regained energy, pushed back up over the 20 and the 50-day moving average, and then continued to climb ever so slightly, but sidestep to 697 in January. Then it started trading in a little range here from 697 to 676. Right through the end of February. Then we got notice, and speaking of moving averages, look how tough they are here. Price couldn't get back over them, certainly not for not very long because it fell under them. So we traded from 697 to 676, then fell on the Iran war news down to 629 down here at the end of March. Then rebounded mightily again, straight in an almost straight up move up to where we are now at 722. This is a 15% rally from bottom to top. That's incredible for a month. And I will say, and I know nobody wants to hear it, but we just want to be safe here. This is getting toppy, very toppy. And if we look down here at the 14-day RSI, we see that it's trading at over 72. And when it gets all red and everything, like you see, the relative strength index, that means that price, at least in the short term, is overbought. And at some point here, we're going to get some people starting to take profits. So there is no real resistance here because we're at all-time highs. So looking forward, our potential price support here is at about 710, 709. We go down to the 20-day at 698. We go to the prior highs here at 697. So that's about at the same point there. We go down to this 50-day moving average at 680. And of course, we can do this 676 line and come in as well. And so we've got more potential and moving average price support here at 676, 680. And we've got the 200-day moving average coming in here at 675, 676. I'm sorry, 670. So, and then on down. Now, next week, we've got a ton of earnings coming out. You know that on Monday after the close, Palantir is going to announce. And Tuesday after the close, AMD is going to announce. So that will definitely move the NASDAQ one way or the other. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund. It closely follows our NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including large-cap momentum stocks like the Magnificent Seven. Now, when I captured this chart today, the Qs were trading at $674.84, again at all-time highs, new all-time highs, 6% above these all-time highs sent here in October and January at 637. So if we look here, the Qs are trading at a really big premium. You don't see this very often, certainly not on an index or ETF. You don't, at any rate, the Qs are trading at a very high premium to this 20-day moving average, which is coming in here, the red line at 638. The 50-day moving average, the green line's coming in at 612 and change. And the 200-day moving average, the black line, is coming in here at 604. Now, we know we can't see it here, but a year ago, April, the Qs were at a low with everything else, hit a low at 402. Then it made a U-turn or a rebound and started higher, looked pretty much like this. Turned and rallied from the lows at 402. It rallied in a very strong uptrend up to this October high right here at 637. That was a 58% rally, really incredible. So from the highs at 637 here, profit taking dropped price down here to 585 in November. Then price rallied back up over the 50 and 20-day moving averages, and then started moving sideways, trading along kind of in a range here along the 50-day and the 20-day moving average. Then it popped up here to 637 and tried to hold but couldn't do it, then fell down here through the moving averages again. What was support is now going to become resistance down here to 594. As you can see, rallied back up to the 50-day and 20-day, but could not get through them, could not do it. It was just profit taking and people waiting to see, traders waiting to see what would happen. Then the Iran war came in and it fell below the 200-day moving average and came down to this March low here at 555. From there, it did a U-turn, rebounded, and in a very steep uptrend that we know about. It flew up 21%. It's amazing. Again, to where we are now at 674. So we say, what do we do with this next week? Well, keep an eye on it because, as you know, stocks follow these big indexes. So there is no resistance here because we're trading at all-time highs. We have potential support here at 664 down here. We have the 20-day moving average, the red line, coming in at 638. And then, of course, we have these all-time highs that we had back in October and January at 637. So that's potential price and moving average support. We have the 20-day. I just said that, the 20-day at 638 and the prior highs at 637. Then we come down here to 616 and 612, where the 50-day moving average is coming in, and down to the 200-day moving average at 604 and on down. So again, be very, very careful here. It's bullish, but it's getting very toppy, so just be careful. Like I like to say a lot of times, trade what you see, not what you think will happen. Our final chart today is a daily chart of the Global X FinTech ETF. The FINX is a symbol, 75 holdings. Top holdings include PayPal, Intuit, Fiserv, Robinhood, Coinbase, all of those groups. A lot of cryptocurrencies are getting in here, cryptocurrency products. FinTech stocks really got beaten up this year, as you know, but I do like this setup. I wanted to come in and see if it looks like it's starting to heal here a little bit, and at least at the moment it looks like it, and I like this setup. So if the market starts and stays positive here in the next week or two, this may do well. It may go up higher here. May. Now, when I captured this chart, I'll call it the FinTech. The FinTech was trading at $25.66, trading above the red line, the 20-day moving coming in at $25, the green line, the 50-day coming in at 24 and change. The 200-day moving average is overhead, and it would be because the FinTech fell really, really hard here. And it fell below that 200-day moving average, and now, of course, it's got to get back over it. I looked at the long-term chart on this. The all-time high for the FinTech was in October of 2021 at about $53, so that's something. Of course, in October 2021, we were going into the COVID area, and a lot of things happened during those next couple of years that were a little bit crazy. So it fell hard down to, and you can't see it here, but the October 2023 low, it fell down to $18. Then kind of moved higher and lower, and gradually fell down here to, as you can see down here, to February lows down here, and down here to these April lows at $22. Then rallied up here to $27, and then fell to where we are now at $25.66. So again, I like the looks of the setup. If the market can stay positive in the coming week, and if the FinTech can stay above the 50-day moving average, which is coming in at $24.46, if it can stay above the green line, I will buy a small position in my trading portfolio with my initial stop at $23.75, right down here. Of course, you can make that higher or lower depending on what you want. If and when the FinX climbs above 27, and that's this pivot right here, if it can move up and over 27, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to watch the FinTech in the coming week. Also, we talked about the HYDR, the hydrogen ETF. 3 weeks ago, we talked about it over 36, and now it's at 59. So that was a great trade. And if Bitcoin can move higher, I'm actually watching the stock Robinhood and a couple of more. So be careful next week. And now please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to bottom fish like a pro. I'm talking about it again this week because actually our fintech trade could turn out to be a very decent bottom fishing trade, and I'd like to think that it might go, I could keep it a little longer and use the rules here in the Bottom Fish Like a Pro program. So How to Bottom Fish Like a Pro is the perfect trade, again, to training program to check out right now. In this program, I show you exactly how to detect with high probability that a stock or ETF is just about to reverse from a downtrend and move higher again. You'll learn how and when to buy, how to manage the trade, and when to take profits. Our new low price for this program is only $199. You should make that back pretty quick. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 Steps to Successful Trading, that's our flagship program. How to swing trade successfully, very popular. Trade the trend to profits, one of my favorites. How to read charts, great for novices and anybody want to brush up. 3 winning setups. These two are only $59 here. 3 winning setups are great for short-term traders. And how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen right here, or easier still, just click on the orange button below. As I keep telling you, be careful out there. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.